in my perfect world, I want to pay dividends every second, right? Push it to the furthest extreme. If we now have a securities firm, we have an investment in a stablecoin issuer and a security token framework. And again, token in the Bitcoin world, and as a Bitcoin maximalist myself, token is like a dirty word. Realistically, like we can see where all this is going. And in our lifetimes and probably in the next few years, stocks are going to be trading 24/7. Markets aren't going to close. Everything's going to have a perpetual swap and feel and trade like Bitcoin. And we're all probably going to get less sleep because of it. And so if you think of just taking the traditional security and putting it onto digital rails, there's no reason it shouldn't be able to trade 24/7. There's no reason we shouldn't be able to pay you a dividend, never mind every day, but maybe instantly accruing.
Hello, everybody. I'm joined by Dylan LeClair from Metaplanet today. Thank you, Dylan, for coming on and chatting to me. I guess to jump into things, talking about the newly formed Metaplanet Securities, how's the process been for you over the last few months?
Yeah, well, first, thanks for having me. Really excited to be on, and I think this is our outside of our Japanese team. There was a conference where they had a panel kind of laying out the vision, but I think this is the first kind of public appearance in English on Metaplanet Securities. So excited to dig in. The last few months have been busy. I mean, obviously, yeah, the Bitcoin market's been turbulent. Our vision has been unchanged really since the start. So it's like 27 months of the same business plan, kind of chugging along. The market's perception of that business plan obviously ebbs and flows, and so we've stayed very consistent. Increasing Bitcoin per share. Being perpetually short fiat currency liabilities. And we wrote a white paper about this over 2 years ago, before perpetual prefers were even a thing. And so this whole thesis we've had has not changed. It's obviously been a volatile time. Bitcoin's volatile, and common stocks of companies that are inherently levered to Bitcoin are more volatile. And so it's volatility is obviously more fun in one direction than the other. But I think we've been methodically kind of going about this. There's a real business build going on. It's funny. 12 months ago, Simon kind of said, I think on a Twitter post, he said, we're going to look to use our Bitcoin as collateral to, acquire financial infrastructure in the future. And this was, the market was red hot, and it was in the midst of the debt summer, if you will. And the feedback from the U.S. retail investors, and I think our stock was a 5 or 6, 7x MNAV at that point. The market was like, don't do anything other than acquire Bitcoin, stay focused, right? And obviously there's a time and a place for that. But I think, for us in Japan, the big opportunity is to be a neo financial institution on a Bitcoin standard. There's a lot of tools like the capital markets, when they're firing and they're wide open. There's not a better business in the world than selling perpetual preferreds when Bitcoin's in a bull market, or selling common stock at a multiple of them NAV. It's screamingly accretive for shareholders. But what can we do when it's not a red hot bull market? And what can we do with our collateral base? What can we do in the Japanese market? It's very untapped. It's a very latent market. And so, I think we saw an opportunity, also the confluence is, the financial reforms taking place in Japan right now, right? Bitcoin has kind of been this, in the US, we have the SEC that regulates securities. You have the, CFTC that regulates commodities. Bitcoin has no issuer. It's a commodity, right? There's been clarity in that front, even before ETFs and all of the FASB accounting and all of the tailwinds that, corporate adoption and institutional adoption saw in 2024. Even before that, there was regulatory clarity on what Bitcoin is in the US market, right? And Japan hasn't had that. It still doesn't.
It's official. The Bitcoin Treasuries conference lineup just dropped. Grant Cardone, Adam Back, Eric Weiss, the man who introduced Saylor to Bitcoin in the first place. Plus, the CEO is actually running the treasury companies, and the macro voices calling out where the institutional capital goes next. 10 confirmed speakers, 1 closed-door room, September 28th in New York at 2nd. Save 10% on tickets today by using the code SECOND. Reserve your seat by scanning the QR code on the screen, or visit bitcointreasuries.net/conference. We'll see you in New York.
And so Bitcoin's not a financial asset. The Japanese version of the House, or the Parliament, if you will, just basically approved Bitcoin to be a financial asset, and also kind of set the groundwork for future ETFs and a bunch of positive regulatory reforms. And so up until this point, Metaplanet's been basically the only corporate or institution seemingly crazy enough to allocate with serious size of conviction to Bitcoin. Everybody else, like, the regulatory environment hasn't allowed them, but big banks, financial institutions, they can't touch Bitcoin if it's not in a bucket that they are allowed to allocate to, right? So this is all very positive tailwinds for us. I think I remember pretty vividly back in the day, MSTR was trading at like a 1.2 or 1.3 times MNAV, and everybody said, well, when IBIT comes out, that's the end of MSTR. There's no reason for the company to exist anymore. And what you saw was actually the opposite. The MSTR MNAV exploded higher, and yeah, Bitcoin was in a bull market and had positive price action. But I think it was more so that there's in the institutional landscape, there is a concept of career risk, right? So for me or you, we log on, we buy Bitcoin at the high in 2021 at 60,000. It goes to 15,000. It sucks, but it's your personal retail capital. You bought it on Cash App or Coinbase. It doesn't matter. But if there's no kind of regulated vehicles for institutional exposure, and you're the guy that sticks your neck out and buys MSTR or buys GBTC before everybody in, like, let's say you're a hedge fund manager, right? Or you are work at a pod shop and you have basically some capital allocated and you have discretion to allocate. Well, if you're the only guy that's buying Bitcoin and Bitcoin goes down 60%, you might, not do too well. There's career risk, right? But what happens when Larry Fink comes out and says, hey, we're offering IBIT, Bitcoin belongs in every portfolio, and we're standing behind this. It's not going away. Well, the career risk gets wiped off for everybody, right? So MSTR explodes higher and MNAV goes up despite new access channels like IBIT in Bitcoin terms, right? MNAV goes higher from 1.3 to 2 to 3 at one point. The reason was because all of the career risk for the institutional allocators gets wiped away. And so right now, I think we're in the midst of a rerun there with Japan. What's the timeline? 1 to 2 years, for this all to play out. But Metaplanet Securities is really a channel where we're gonna have a big, strong balance sheet of Bitcoin, and we're going to continue to add to that position. And our goal for the firm is to grow Bitcoin per share. But in addition to that, if you think of all of the things that a legacy financial institution can do, with securities and with a huge balance sheet, what could you do on a Bitcoin standard? And so that's our real vision is combine the balance sheet, fortress balance sheet, with a neo financial platform in Japan built on Bitcoin with a focus and vision towards Bitcoin. I think there's also like the plumbing is a bit behind, right? So Stride came out and shocked the sector, a month or two ago with daily dividends. It's a brilliant, masterstroke by their team, and they deserve a ton of props, because theoretically, the same security that pays semi-annual dividends, which is common in Japan, or quarterly dividends or monthly dividends, if you just change the dividend frequency from twice a year to every day, you theoretically take like 10% of the, 10 vol points, 10% realized volatility off the security, right? So if you're trying to synthetically engineer a low volatility security, daily, high frequency dividend or interest payments is really, really important, right? But in Japan, like it's physical mail, right? And so like we're going to be shipping for dividends, right? For a public security, you're shipping manila envelopes across the island chains to shareholders, right? And we have 250,000 shareholders, right? So it's a lot of paper. And so something like a daily dividend under the current infrastructure is not feasible. And so a skeptic or a bear would say, well, that's a problem. But the optimist would say, well, let's build the rails, right? And so, Metaplanet Securities, formerly SIBO Securities, has been in the business for 7 years of private venture debt, right? And so you're a small startup, you maybe did a seed round to friends and family for equity, but your next round, you're really optimistic about the company, and you don't want to sell more stock. You want to raise debt because you think you have a high ROI opportunity to invest in the business. And so SIBO Securities was basically a high yield marketplace for venture issuers, where another piece of context is like there is no high yield market in Japan, right? Like there's a junk market, there's a high yield market in the US. It doesn't exist in Japan. It's all investment grade bonds. And so the high yield issuer market is basically nothing. And so SIBO Securities, they didn't make a big splash in the market. They did 100 issues from 40 different issuers over 6 or 7 years. But the rails were built from scratch. all digitally native, right? So this is a completely digital native online securities platform, whereas usually, there's physical branches, or, if you want to onboard with a securities firm, you need to fill out paperwork and, mail it in. And so, I think this acquisition for us is really, really important. The headline price of $13 million doesn't even begin to account for all of the strategic optionality for us into the future. Like this, the Type 1 license that the firm has right now, it's pretty narrow, right? It's a bond brokerage house. But with that license, basically it opens up a lot of strategic optionality for us into the future to do anything a traditional securities firm would do with a Bitcoin focus, right? So I threw a lot at you there, but I think that's kind of the TLDR of how we think about it, and why we're so excited about the opportunity going forward.
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wish for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Yeah, thank you for that. No, the details where I need it. It's fantastic oversight of things. And obviously, like the last few months or so, it must have been really frustrating for the team with that sort of, I guess, in Japan, you've always got that infrastructure. You've sort of got the waves going against you in a way. Yeah. Seeing the likes of Strive doing daily dividends, obviously Strategy doing what Strategy do best, and keeping innovating. It must have been pretty frustrating with like the infrastructure you've got. But obviously fantastic work so far, and I guess a lot of the shareholders who'll be watching this will be pretty clued up. But is it all right if you give anyone who hasn't done much reading on it what the actual acquisition of the Type 1 license actually lets you do but you couldn't before?
Well, one, it's a bond marketplace, right? And so these are all private issuers, but theoretically, a company can go to Metaplanet Securities, a Japanese company, private company, a public company, the opportunities are very wide, and issue debt on the platform, right? Directly to users. And so, just for some context, right? Like the, interest rates around the world are changing and dynamic and responding to some of the inflation scares. But, for a long time, Japanese yields, 30-year yields were like 1%. Right now, they're going higher and closer to 3 or 4%. But credit spreads, right? So in fixed income, there's kind of two components. There's what is the interest rate? What is the risk-free interest rate? So if you're subscribing to 10-year debt or you're buying 10-year debt, what can the U.S. government pay you for 10 years? And so let's just say that's 4%. And so how risky is a company on top of that risk-free rate? And that's called the credit spread, right? And so if a company has a 400 basis point or 4% credit spread on top of the U.S. Treasury rate, and they say the U.S. Treasury rate is 4%, then that company would be issuing 8% bonds for 10 years, right? And so in the US, like just for, example, MSTR is a, 40, $30 billion public company. They are a serial issuer and they've been public for 30 years and they have a fortress balance sheet and they're a seasoned issuer. Their corporate bonds have a credit spread of about 400 basis points, right? And so the reason that, Michael Saylor and the strategy team didn't like the converts, right? Well, there's a lot of reasons, but one of them was that the convertible bond buyers, the arbitrageurs that, the hedge funds that buy this sort of debt, they weren't really valuing how protected they were, right? So the first bond that comes due that has $1 billion owed against it. Well, MSTR is 50 billion in Bitcoin, right? So it's like 50 times over collateralized. Technically, it's an unsecured bond, right? So the Bitcoin's not encumbered, but the Bitcoin is there available on the balance sheet and they're not going to default. The bonds will be paid, right? And so theoretically, like that's a extremely, extremely safe bond, but the market doesn't price it like it's safe. The market prices it like, any other corporate bond, right? Because they're not credit buyers. Convertible bond guys are interested in trading volatility. They're not doing, they do credit analysis, but their job isn't to be fixed income investors. It's to trade volatility, right? And so Saylor and the team decided to go to preps because the credit spreads and the price of these securities floats and trades in the public market. And so me or you or any retail investor or any institutional investor can decide how safe or risky these things are and price them accordingly. Versus the convertible bonds, me or you can't buy them. It's only it's walled off to institutional buyers. And so with that said, credit spreads in the U.S. relative to Japan are wider. Right. And so the small amount of issues on SIBO securities, which, they were, like $5 to $10 million on average, let's say, they were being issued at credit spreads for small venture companies, right? Venture debt. So, a lot more risky than maybe a public company with a huge balance sheet. The credit spreads were about 500 basis points, right? So when interest rates were, say, 1%, then, companies were issuing to investors on SIBO at 6%, let's say. And so that's for a private company. And so, theoretically, this is not just a channel for Metaplanet, right, to access fixed income. We're building a marketplace where, we want to encourage others to come use the platform too, right? And so I think it's not just a capital access thing. People saw this in their first thought is, well, now Metaplanet can access fixed income capital, which is definitely true. Having this channel in-house as a wholly owned subsidiary is very strategic and important for us. But there's also a world, right? If you don't think Bitcoin's going away and you think Bitcoin's going to persist and become more of a staple in global capital markets, well, what if the next 10 adopters of the corporate treasury world, like there's Bitcoin for corporations in the US, Michael Saylor was going door to door telling anybody that would listen, hey, here's the pitch, here's the playbook, here's what you should do. Go raise capital, if you can or you want to. I think there's going to be a world where that, comes around again, right? And Bitcoin's back in favor and it's the hottest thing in the market. And there's going to be a lot of corporates and a lot of institutions and a lot of individuals that get interested in the asset class. But, for an individual, you can buy Bitcoin on Cash App or Coinbase, right? But for an institution, it's a bit different, right? It's, do I have capital to deploy? Am I raising capital? Am I raising equity? Am I raising debt? And for us, we want Metaplanet Securities to be, a one-stop shop for, all of the things that you would want, all the picks and shovels that, an institution or a corporate would need to access the asset class and to access their capital structure, right? And so fixed income or, bonds or preferreds or, anything else, people are only viewing this as a Metaplanet thing. But in reality, we want this to be a Bitcoin adjacent in the Japanese capital market channel, right? And so we're going to, continue to onboard people to the actual platform. But I think over time, this, our goal is to have this be the everything Bitcoin, company, financial services company in the Japanese market. And that should not only, be a capital market access channel for us, but also should be, a pretty solid, revenue generating business for us on a long time frame, right? There's a real strong business model, like all of the things that, the strategy team talking about in terms of building on stretch and building, kind of different credit products or different, risk reward yield opportunities built on top of preferreds and other fixed income instruments. The Japanese market is yield starved. And so there's not only an opportunity for us as an issuer, right, to access the fixed income markets. But there's also a real strong opportunity for us to, sit at the center of Japan and access USD capital markets, JPY capital markets, create interesting compositions, of securities or products or security tokens, right? We disclosed that last week. There's a very advanced security token framework in Japan. We have a stake in the leading stablecoin in Japan, JPYC. And so, all of these things are, for a while, people couldn't really see the vision. They were like, why did you just invest a venture stake in a stablecoin? And what did, you keep talking about Project Nova, but we haven't seen results. The reality is things in Japan move very, very slow. We're the opposite. We like to move as fast as possible, but we're dependent on the other side, the counterparty, or whoever else to move as fast as us, right? And so now I think the vision is starting to come into focus, and it's that we're going to be a Bitcoin treasury company. We're going to have a huge balance sheet, but we're also going to be sitting at the center of the Bitcoin universe in Japan, and all of the corporate, institutional, and retail adoption that happens. We're going to be figuring out how to sit in the middle of it, earn a bunch of revenue, and plug in the Japanese fixed income markets. And so it's a very multifaceted opportunity for us. And I think if just looking at the surface level disclosure material, you might miss how just big it is.
Yeah, no, it sounds really exciting. And I guess sort of what we can take away from that, me personally, is, would you say instead of just being a company, you're sort of like envisioning Metaplanet as more of an ecosystem where you can build layers on top of instruments, etc.?
Yeah, I mean that's we want to be a financial company on a Bitcoin standard, right? And so if you think of all of the things that a financial company can do, right? Or like bank has a specific meaning in the market, and it means take short-term demand deposits, and you're regulated a certain way. So it's not a bank. But if you think of a neobank on a Bitcoin standard, like what is Strategy doing? They're issuing obligations, liabilities in the form of perpetual preferreds, right? And then they're putting it into Bitcoin as an asset. If you think about what is a bank, they're taking on liabilities in terms of deposits, and then they're investing that capital and they're earning a spread, right? And their return on what they invest is greater than what they pay. I mean, that's Strategy's model too. It's just the liabilities aren't overnight deposits; they're perpetual preferreds that can't be called in. And so, I think perpetual preferreds is a massive opportunity. We're still extremely focused on that, and we have a pre-IPO preferred, Mercury. It's a convertible preferred, kind of like closer to Saylor's Strike, right? So Bitcoin upside in the form of the common stock, but also a dividend with downside protection. We have our Mars security, which we've outlined. So Metaplanet adjustable rate security, which is similar to Stretch, and so we're still very focused on that. And the goal is still very clearly to have a public listing in the form of an IPO. But there's also, I think, an important point is that preferred equity is not technically credit, right? It looks like a credit instrument. It feels like a credit instrument. It acts like a credit instrument, but it is equity, right? And so there's a huge pool of capital in the world, and this is why Michael Saylor and the strategy team and the Strive team are really excited about the entrepreneurs and the innovators that are building on top of the instruments. They're using Stretch and SAID as building blocks to build over collateralized stable instruments that pay you a lower yield, or leverage that pays you higher yield but has more risk and more volatility, right? There's a lot of interesting ideas out there. And so you can tranche Stretch and over collateralize it, and kind of like CLOs or CDOs, which those have a bad name, but the CDOs and collateralized kind of debt obligations aren't inherently bad themselves. They only have a bad rap because people watched The Big Short and said, "Oh, well, those are full of toxic mortgage-backed securities, and they're inherently bad." No, it's actually not. It's just they were filled with securities that were had false credit ratings and were backed by not toxic assets, right? And so a lot of these ideas of, okay, sailors take the first step of, I'm gonna have a huge Bitcoin balance sheet, I'm gonna issue a low volatility Stretch-like instrument, and then someone else is gonna take the low volatility Stretch-like instrument and take it to the finish line, and take that last 10 to 20% of the volatility out of it completely, right? And so that's a big opportunity for us, or for anybody in the industry. But the real important thing I think to think is that to actually, the bond market, the debt market, perpetual preferreds can't fit in that box perfectly, right? There's a lot of capital in the world, trillions of dollars just in Japan, right? That need actually a credit instrument, whether that's a 1-year bond or a 5-year bond or a 30-day commercial paper instrument, right? Like, what is the commercial paper market? It's you give me $99.30 and I'm going to give you $100 in a month, right? And there's huge amounts of essentially it's just like a 1-month loan issued by a huge corporation that's good for it, and you collect a little bit of a better yield than the U.S. Treasury market, right? And so there's huge amounts of actually like the credit markets that perpetual preferreds look and act and feel like it, but they can't actually fit in that box. And so with Metaplanet Securities, our goal is to be able to open up all these capital channels in Japan, use it as a fuel and accelerant to channel capital into the Bitcoin ecosystem. But also, the yield disparity in dollars versus yen is about, let's say, 3%, right? So, a 1-year bond that's at 7% in dollars is 4% in yen, right? And so if there's a fixed income security in the United States that pays 13%, like SETA or Stretch, right, 12, then that can be translated into a yen denominated instrument with no FX risk at, say, 10%, right? And so I think there's we have US subsidiaries. We have Metaplanet Asset Management, which is still in the works, and there's going to be more to come there over the coming year. But I think the big opportunity for Metaplanet is we're domiciled in Japan. Our HQ is in Japan, but we are a global institution that's essentially functioning as a bridge between the East and the West capital markets. And so we can take Japanese yen instruments and turn them into dollars, dollar instruments. We can take dollar instruments and turn them into yen. We can really, we have a blank slate, right? That's what Metaplanet Securities enables is that we now have a blank whiteboard, and the world can be our oyster. Obviously, there's limitations to the current license, right? And so the big step was, the step change function was getting a type 1 license in the group, right? As a wholly owned subsidiary. Everything can't be done tomorrow, right? Like, for instance, there's not equity trading. Like, you can't buy stocks at Metaplanet Securities right now. But with a type 1 license, that is a service you can provide. And so if you wanted to apply for that functionality from scratch without a type 1 license, it could take years. With a type 1 license, it's a much, much more expedited process. And so I think over time, the functionality and kind of the actual services that we can provide and offer and build upon will expand and grow. And so it's a really, really exciting step for us.
Yeah, it sounds massively exciting. You touched on Project Nova there, and obviously JPYC in particular, that investment in the stablecoin infrastructure. I was sort of thinking, when we speak about Mars and Mercury, obviously we had the delay in May, which I'm assuming has been very frustrating for the team at Metaplanet because of the infrastructure surrounding Japan. But is there a strong connection then between JPYC and those prefs in terms of tokenization? And how do you think that could potentially solve a liquidity problem, which you normally get with sort of private placements, etc.?
Yeah, and so, one, I think the preferreds. It's not so much the infrastructure has caused the delay. It's more so that there's 5 prefs listed in the entire Japanese market, right? Saylor IPO'd 5 preferred stocks last year, right? So Saylor in 12 months issued as many preferred securities as the entire country of Japan has currently listed, right? So it's a different market. The market has never seen a Bitcoin balance sheet issuer. The market has never seen a perpetual preferred, and the market has never seen a preferred issued by a company that has more so balance sheet strength than income statement strength. And so, I think one of the unique components of Metaplanet is that we're aiming to pay dividend and interest obligations with cash flow, right? So we have our Bitcoin income generation business. We're using Bitcoin's volatility with a very small subset of our assets, where we can enter the Bitcoin market with put options, or we can use Bitcoin's volatility in other interesting ways to essentially earn premium, earn income, and then use that as a way to service preferred dividends or interest obligations. And so we've got 7 quarters of track record now. The Japan and the regulatory authorities have said we really want to see 8 quarters of track record, right? And so that's coming up, right? And I think checking that box will be, hugely important for us.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Right, but that would be just if an IPO was coming across, it would be a Tokyo Stock Exchange listed security on the traditional rails. Our goal is monthly dividends, and that's a big ask, and we're gonna do everything we can to make that happen. But nobody's done that before. Usually issuers pay dividends twice a year in Japan, right? So we're doing a lot of kind of the back office work to get up to speed there. But theoretically, in my perfect world, I want to pay dividends every second, right? Push it to the furthest extreme. And so if we now have a securities firm, we have an investment in stablecoin issuer, and the securities, the security token framework, and again, token in the Bitcoin world, and as a Bitcoin maximalist myself, token is like a dirty word. Realistically, we can see where all this is going, and in our lifetimes and probably in the next few years, stocks are going to be trading 24/7. Markets aren't going to close. Everything is going to have a perpetual swap and feel and trade like Bitcoin, and we're all probably going to get less sleep because of it. And so if you think of just taking the traditional security and putting it onto digital rails, there's no reason it shouldn't be able to trade 24/7. There's no reason we shouldn't be able to pay you a dividend, never mind every day, but maybe instantly accruing, right? And so we just published a disclosure on a joint study with Progmat, JPYC, and Metaplanet Securities. And so Progmat is one of the mega banks in Japan. Mitsubishi UFJ is a spinoff. So a lot of their kind of some of the executives and leadership from one of the mega banks created a new company called Progmat, and they are they're the kind of the leading security token issuer. And so there's I think there's a couple $100 million of tokenized real estate funds, et cetera, that is already out there and outstanding. And so with Metaplanet Securities, the goal is to have multiple capital channels and have as many levers as possible at our discretion, right? And so Tokyo Stock Exchange listed perpetual preferred stock, we've stated our intentions there, and that's not changed. But we can also do other interesting things, like a pilot project for security that pays you every day, right? With daily dividends. And so we've disclosed that. These things take time, of course. But this is not something we started thinking about and working on, last week when it was disclosed, right? If you kind of look at our, last 3 or 4 quarters of stated roadmap and goals, the whole, Project Nova is basically building out the Everything Bitcoin platform. And so, if you were starting a neo financial institution from scratch with Bitcoin at your core, with a market that has no yield and infinite cash on the sidelines, what would you want to offer them, right? And so that's the question we've been asking ourselves, for quarters now, and now, just recently, the last couple of weeks, the market is starting to publicly see that vision. But this isn't something we just stumbled on last week. It's been kind of a dedicated, diligent process to get to this point, and there's a lot more work to do ahead.
Yeah, great stuff. And I guess obviously you speak about it being something which has been going on over the last 3 quarters or so, and maybe even longer. Has any of that sort of process, especially at the institutional side of things, been affected by the drawdown in the underlying asset? Has it put any roadblocks in your way at all, or has it been pretty separate in a way?
It's good to get a bear market under our belt. I mean, everybody in the space, you probably come into Bitcoin when it's riding high, and then you see a bear market and you're like, this stinks, but has my thesis changed? No, I'm gonna stick with it. And then a year or two, Bitcoin comes around and makes new highs, and all the Bitcoin people that were being called names and stupid and whatever, all of a sudden look like geniuses again. And this is kind of how this cycle works. And so with strategy, you saw in 2020 they adopted Bitcoin. They looked, Michael Saylor was a genius, and then 12 months later, the Wall Street Journal was clowning on him, and the whole world was saying, "Oh, well, the experiment failed," and it didn't fail, right? It just, there was a ton of volatility, there was a big drawdown, and then 18 months later, 12 months later, whatever it was, MSTR is on the top of the world. It's $100 billion company, and once the market, maybe I think it was mid 2023, about 6 months or so after the kind of the peak FTX fear, it was like, oh, okay, well, they started raising capital, and the market, woke up and said, wait, okay, Saylor's going to make it to the other side here, right? They're not going away. They're not selling their Bitcoin. They're not, folding. And so I think, right now, this is in the eyes of the Japanese public, retail and institutional investors, this is our gut check, right? And so, our thesis hasn't changed at all, right? Bitcoin has had a mark-to-market drawdown, unrealized P&L, but we're not making decisions on what's the cost basis of the position over the next 2 weeks or over the next quarter. It's no, we're interested in building this for the long term. Mark to market volatility is not going to deter us. With that said, there was 8 or 9 companies that adopted some form of Bitcoin strategy that didn't explicitly credit Metaplanet, but they were essentially following in our footsteps, which we were happy for and championing. All of those companies have come out and apologized, have said we're not doing Bitcoin anymore, have sold the Bitcoin. And so, Bitcoin bear markets really test your conviction, right? And so I think right now we're kind of, getting through the time-based capitulation of this bear. We've had the brutal price action. Now it's just the boredom phase, right? Once we make it to the other side and Bitcoin starts doing what it does best in a bull market, I think, there's a lot of people that are going to be, I read the comments, right? I read X. There's a lot of people that say, well, I think Metaplanet's crazy, but I respect their conviction and their steadfast nature with their business strategy. They've been unwavering for 27 months, and I give them props. I don't agree with it, but I give them props. This is just what Bitcoin does. It tests your conviction. It makes you wobble. It makes you question yourself. But we're pretty unshaken. I think the Japanese retail base. Our shareholders have been increasing every quarter, right? And so now we have 250,000 retail shareholders. That was 12 months ago when the stock was performing really, really well. I think it was half of that, right? So through the bear, our shareholders are increasing. I think the institutional investors, interestingly enough, we have Japanese retail investors, U.S. global retail investors, U.S. global institutional capital. The Japanese institutional, landscape is very underdeveloped, right? And so for Bitcoin, for Metaplanet. And so I think that's, to the point earlier of the career risk hasn't been stripped off in Japan. And so that's coming, right? And so, there's firms with infinite capital, huge amounts of capital, and they have mandated buckets, right? And so, and I speak to these guys, and, there's some portfolio managers that, it's $1 trillion institution. They have a side portfolio that only manages $2 billion, but of that $2 billion, they are mandated to buy Japanese stocks. And so if there's a Bitcoiner at a firm and they're like, well, I can't buy Bitcoin, I can't buy strategy, I have to buy Japanese small cap stocks, but I believe in Bitcoin, Metaplanet's interesting, right? But, outside of, that, we don't have, I don't think, the Japanese institutional audience yet, because Bitcoin hasn't been a financial asset. It's been this weird gray area thing. And now finally we're getting the regulatory clarity. I think there's been a lot of noise on our last two quarterly financials where we have a huge net income loss just from impairment, right? And so typically a Japanese company, if they reported the net income numbers that you saw like in the last quarterly disclosure, it's rough sledding. It's like an imminent problem. For us, we still have we have a ton of balance sheet strength. It's just a mark to market impairment, right? And so, our equity ratio, our, level of assets relative to our obligations, it's like 20%. We're actually like relative to most Japanese companies, we're extremely balance sheet strong and are very underlevered. And so the perception, I see some of these comments, the quarterly disclosure comes out and the skeptics are like, well, Metaplanet's gonna go bankrupt because, and this is just noise, right? It's totally noise. It's a misconception. And these things will, just as the pendulum is swinging way far to the left in a bull market, it'll ratchet back and people will say, oh, they didn't die. They're still buying Bitcoin. The securities, company is a real business build out. Oh, this is, people for a long time were saying we're just a company that buys Bitcoin and does nothing else. And I think that was a very short-sighted vision. It's like, we're not buying Bitcoin just for no purpose, right? The purpose is to build a monster balance sheet and an asset we have conviction in, and then that unlocks everything else we want to do, right? And so, it's a progress, and I think in due course, all of the skeptics, or a lot of them, will turn, as is tradition in a bear market to a bull.
Yeah, it sounds like history repeating itself again. You made the point obviously about strategy and how you feel you are compared to them right now, almost that build up to when the next ball hits and your hard work can really come out to fruition. You spoke obviously about that retail institutional sort of divide. You've got that growing retail base. And often what I read, obviously, with Metaplanet is you have this big advantage in terms of what you've referenced, where Japan's experience is really low yield household savings for what feels like eternity now. And people have really suffered because of it. I think the Metaplanet investor relations sort of material talks about 1.19 trillion yen sort of sitting around in these savings waiting to be tapped.
Quadrillion. So yeah, 7 trillion.
Oh, good,
$7
yeah.
trillion.
7 trillion. There you go. So it's sitting around with nothing sort of there. So I guess my question to you is more just your comments in a way on sort of the edge Metaplanet has compared to other sort of domestic treasuries like Smarter Web in the UK, Strategy in the US. How does that advantage, at least in your eyes, play out for you over the next few years?
Being in Japan is a really huge opportunity for us. And it's not just being in Japan. It's like being the, I don't want to say monopoly, but being the player, right? Like I think we have 90 something percent of the Bitcoin in the Japanese market. And the companies that do have some Bitcoin are, again, either apologizing for it or not embracing it, right? And we are full-fledged embracing it and not apologizing for it. And volatility is par for the course with a 50 vol asset, right? And so, I think with, Saylor, funny story. And I think he had a panel with Simon, I think, I don't know, a couple quarters back. And he said, hey guys, I'm coming to Japan. So you got about a year, right? And so that was a kick in the butt for us to get moving. And on that panel, I think, or maybe a quarter or two after, he said, well, good news and bad news, Simon. I'm not coming to Japan, so you can have the market, right? And so that was a funny moment, but more so to say it is basically impossible for an international company, a U.S. company, to come to the Japanese market and set up shop, right? Like you need to be on the ground, you need to be Japanese native. Like I think a lot of the American and Western folks don't understand the role I played. Like I joined the company and there was a team of people that had been in the Japanese public markets for like 6 or 7 years and a huge Rolodex of everybody in the space. They've worked at Goldman Sachs in Tokyo for 20 years, right? And so like Metaplanet, even though there was a phase transition, was already like very much on the ground in Japan. It wasn't like we just like, showed up there and said, hey, we're doing Bitcoin. It was like, no, that there was already deep roots in Japan in place, right? And so, with that said, Metaplanet's going to be in Japan, but we have optionality. Like we can go elsewhere, right? And so versus other companies, it's, I don't want to say anything's impossible, but it's going to be basically impossible to come and do anything really meaningful in the Japanese market. And so, I think that the market's also discounting our, kind of international, jurisdictional optionality. We can be a multi-currency issuer, theoretically, especially with this, with this new security shop, right? And so, dollar bonds and dollar fixed income instruments have been, absolutely massive in Japan over the years because of that yield difference, right? So like Nomura had a huge business where they were just selling USD denominated debt to Japanese retail that wanted a higher yield, that wanted a high coupon, right? And so I think, the Japanese advantage is real. It is structural. It's a conservative culture, so trust is going to be built, right? And so I think, the silver lining of this bear market is that, bear markets are always going to come; they're never going to go away. But people want to see adversity hit and us to survive and keep on chugging and keep on operating and not fly too close to the flame and still have a robust balance sheet and manage the risk, right? And so going through that, I think, is very beneficial. We're going to have to, build a strong trust and track record because, there are a few legacy incumbents in Japan and they have some real staying power in terms of, the big banks or the securities firms or whatever. And so it's not an easy market to penetrate. But the good news is Metaplanet has a massive brand presence. As Metaplanet in Japanese is basically synonymous with BTC, right? So if, as you talk to any institutional investor or you look on X right now, Bitcoin's not the hot flavor of the month. It's AI, it's memory. You talk to an institutional investor and they'll take the meeting and they'll say, hey, we love the story, but Bitcoin's not where it's at right now. I'm focused on X or Y or Z, right? But we know that'll change, right? And so when that time comes and Bitcoin is the pretty girl in the room again, it's the hot thing in town, then Metaplanet's going to be positioned as the Bitcoin play, right? And so, and it's not just the play as in, the stock exposure, but the picks and the shovels and the whole, platform business as well is all going to be Bitcoin aligned to Bitcoin adjacent. So it's a really exciting time for us. And, to be honest, I'm getting, deja vu as I kind of, as we kind of go through these steps and work through the bear from 2022, right? Where I remember everybody was like writing MSTR off and saying that, Bitcoin on the balance sheets failed experiment and, Saylor's underwater by X, Y, and Z. And so, all of this stuff, it doesn't feel new. It's like a rerun. It's sort of the same story, but with a different flavor and twist.
Yeah, I saw your tweet on that yesterday, which about sort of already predicting what's going to happen from your own lived experience of being through bear markets, going to bull markets. And yeah, it's a great point. I think we've got a couple of minutes left now. So I was just wondering, with the last sort of question, we could look more to the future, the whole industry. So my question is, where do you see sort of the digital credit ecosystem from, like, obviously we've spoken a lot about Metaplanet, of course, today, but the wider ecosystem across the world, where do you see that going, let's say in 5 years or so, or 2030?
It's good that we got a real gut check. Again, it sucks at the time, right? But seeing that these instruments and the capital structure bend but don't break is really, really important. It's also something to note, like there's a huge amount of capital in the institutional world that doesn't buy something when it just gets issued, right? Like, I mean, there's certainly a huge section of the institutional world that just participates in capital market deals, right? And so a new IPO comes or a new, pipe investment or a new debt deal. And there's a big part of the capital markets that their job is just to participate in the deal and flip it for a 3% gain in a day, right? But there's a whole different subset of especially the fixed income universe in particular, that needs to wait for instruments to season, right? And so like, a big pension fund won't buy a fixed income instrument until it's out there and trades for 1 year, 2 year, 3 years, right? So every 2 weeks that goes by and the dividend gets paid, whether Bitcoin's up, down, or sideways, builds credibility, builds track record, and opens up the universe of investors that can participate and that will look at it, right? Like some people will say, no, like, look, I'm not going to talk to you until this thing has dividends paid for 3 years, right? And so this is part of the maturation process. I think, as Bitcoin especially goes into a new bull market, and I think, the strategy team, they're human. They've made some mistakes. The communication around the dividend reserve and some of that, the market spoke loudly and clearly and said, look, we don't like that. And so they're rectifying that, building up the cash reserve, the theoretical, fair value of these credit spreads and how risky they are deemed is slowly coming in. The price is moving up. And so, I think on a long time frame, Stretch is not going to be a 12% instrument forever, right? Over time, the cost of capital will come in. It, should float to 10 and, then under, and especially after the convertible bonds get taken off, the credit spreads and the price or the yield of these preferreds should go lower as a result. I guess it depends on where they set the dividend and how much they want to sell of it. But I think that there was a lot of hysteria, right? Like technically, preferreds, again, they're not credit, they're not debt, they're equity, and so technically, legally, the board doesn't have to declare a dividend. Like you can't go bankrupt as a preferred issuer, right? So like if there was ever a point where the solvency of the firm, which is not even close to where we are today, but theoretically, where the solvency of the firm was at risk, the dividends would be paused. And so amidst the downturn from 80,000 to 60,000 with BTC, there was all this hysteria of like, Saylor's going to pause the divs. He doesn't have to pay. He's going to screw the preferred shareholders. And there was all this hysteria, right? It was total noise. It was just chaos. And I think it was nonsense, but the market was so uncertain. And so Saylor was like, look, we sold 3,000 Bitcoin. The market didn't even notice until I posted the disclosure. We paid the divs, chill out. Right. And so like, I think that was a really important step of one, you finished the quarter by selling no stock, by selling no preferreds, issuing no securities, and you just used the fortress strength of your balance sheet to pay the dividend obligation. And so, I think, maybe it was always like, the bottom of a bear, or like Saylor was going to need to slay this dragon eventually, right? Like as Bitcoiners, the never sell BTC mantra was really powerful and strong, right? But as a financial institution, you can't purposefully tie your hands behind your back and say, we're never going to do something. Usually the market lets it test you on those things, right? And so I think they experienced that. They said, look, we don't want to sell stock here. We don't want to issue prefs here. We'll just use our $50 billion balance sheet, pay the divs. It's no problem, right? And so I think that was a really, really important moment. And we'll look back on that as one of the reasons why, the prefs and Stretch and all of these instruments trade strong in the future, right? Because look, we had a real scary moment, and it passed with flying colors. The divs got paid, and all the people that were hyperventilating and fear mongering about it were just being irrational. And so I think that's the silver lining of all this stuff is like would everybody in this ecosystem have preferred if Stretch just stayed at 100 for the last 3 months? Yeah, of course, right? But there was learnings and teachings along the way that into the next bear market or into the next cycle, the strategy team will know, and they'll build from it and they'll learn from it. And I think Strive is also learning from it. Metaplanet, as someone that hasn't came to market yet with a perpetual preferred that's listed, we're learning every single day and watching the market and seeing investors and what they think. And so I think it's all positive.
Yeah, it seems to be a very exciting future ahead, in your opinion, which is always good to hear after the last few months.
Yeah.
I think that is the conclusion of the interview. So I just want to say a massive thank you to you, Dylan, for joining this Bitcoin Treasuries.net exclusive, for taking the time out of your busy schedule to get this, I guess, first scoop for us of the new acquisition and the new formation of Metaplanet Securities. So thank you very much to you, and thank you for everyone for watching. Bye-bye.
Thanks, Miller.